He is your agri-gold reps for Central Illinois. Get the most for every acre with agri-gold for Central Illinois. This podcast of the Markets Club podcast with John Heinberg from Total Farm Marketing and Donna Hughes from Stonex Financial, Matt Bennett from Ag Markets Net. We were talking about the commodities markets with the presidential election and soybean demand. We will start with Matt Bennett from Ag Markets Net. We will start with Matt Bennett from Ag Markets. How is the corn cash market in Central Illinois? Otherwise, do you have some concerns about the tariff talk?
As far as the cash market in Central Illinois, it has firmed up a little bit with harvest getting close to being finished. It definitely is acting like it usually does, which the cash market will always the basis will firm to get a hold of the final bushels, and that's essentially what we've seen. So if you look, for instance, at the cash market, ADM St. Louis, the cash price today, last month of October, is a nickel under the D's, whereas the cash price for December 1st, which is literally just a day over a month away, is 35 over the D's. And so you see that there's a little bit of firming going on, especially once we get out past the end of harvest, which should be a good reward for growers. With the tariffs, I think part of the export business that we've seen in the last couple of weeks is mostly due to front loading demand, trying to hedge their bets on who might get elected with all of the talk with tariffs. I do think it's somewhat concerning. I also understand that essentially both the Trump administration and the Biden administration have tariffed China. So Trump was more ag centered. And so it certainly causes concern. But at the same time, right now we are the cheapest source of corn and beans. I do expect to see exports affected if those tariffs actually occur. There's no guarantees that what we've been told so far is what's going to happen. So I think there's concern, but for now, we don't even know who's going to be elected. So I'm not going to get too worried about it just yet.
How is the corn cash market for right now in Decatur? Like a DM.
Yeah, when you look at Decatur's cash price right now, they've actually had a little bit of firming going on there as well. Just to look at the cash bid as of the time that we are recording this, they're 16 under the market, which gives them a price of around 395, 396. And so it wasn't so long ago that Decatur was running more like, 35 under. And so 30 to 35 under. So they've definitely seen some appreciation there. And again, I think a lot of this has to do with the fact that harvest is winding down.
We are with John Heinberg from Total Farm Marketing. John, how much time so we have our competitors in Brazil to shipping for beans?
Well, obviously they're just still rolling with the planting side, and we've seen the improved weather down there really kind of get that planting pace kicking in to the point. The delay side of it is no longer really even a thought in the marketplace. Again, China's been active picking up beans, obviously U.S. beans, but still very active picking up beans for the spring, in that May, April delivery window. So that'll be kind of that key area when we get, when we start realizing this crop's getting put together. So after the first of the year, we'll, if those beans are coming and they're healthy, that's probably the impact. We'll really see them on the marketplace in that time frame, just because of the competitive cost. So at least right now, as Matt just kind of stated, the U.S. is about the best game in town for beans. We've seen that in the improved demand here over the last handful of weeks, and that'll probably at least continue until we get into the first of the year.
How is the demand for export from this week?
Well, for both corn and soybeans, we had very, very good round of sales again, well over 2 million metric tons for both. On the corn side, that's 3 consecutive weeks over the 2 million metric ton mark. But the only thing maybe I was a little disappointed in was the fact that a lot of those were reported, so there wasn't a lot of extra sales over the top. But again, I still think the demand base is very good. We did break our streak at 9 days of reported sales in a row, took a day off and got one more in, and nothing was reported today. Soybean side too, again, we continue to see that and chatter that China is an active buyer, still picking up U.S. beans here for the fall and early delivery. And again, good solid numbers within expectations, those on bean sales again today. The only concern, maybe got to watch the calendar here. This is a window where shipments peak out and possibly sales could peak out here as well, as maybe some of those needs or supplies that China needs are getting kind of met up in this time window, especially in the soybean market.
All right, Donna. How would that be possible to have some severe cases in the trade deficit from China?
Yep, depending on what happens with tariffs and all of that going forward, obviously that would be a concern, and so we'll have to see how that develops as we go further out on the calendar.
A reaction for Brazil. I go with mine.
I think the market's reaction to Brazil.
I have a question. When can we expect that the market's reaction for Brazil? I go with Matt Bennett.
We've seen some strength, I believe, over the last few weeks before Brazil started getting rainfall. I do think that it had a little bit to do with the strength in the bean market. I think it had a lot to do with money flow as well, though, probably more so the money flow. Brazil was dry when they were supposed to be dry. They get into October and typically they start getting rainfall, and that is exactly what we've seen happen. And so, the market is unlikely to get into any sort of a frenzy this early in the marketing or growing season, if you will. I don't really expect, unless you get into a drier pattern once again after this, healing up process they've kind of had here. I mean, planting's running pretty much normal pace, both first crop corn and soybeans. And so I don't really envision that you're going to see a whole lot of a panic or fear there just yet. I think that if you got into a pattern similar to what they had previous to this rainfall, which was, if we're honest about it, was a definite drought. They were drier even than normal for their dry season. If we would return to that, the La Nina is intact, maybe the market would get excited, but I wouldn't expect that probably for another, at least 4 to 6 weeks, because we need to see that kind of set in and start to impact what they think eventual production might look like. Them getting the crop planted in a timely fashion kind of ensures that most likely the safrinha crop will get planted about the time that it needs to. So I'm not too worried about that. It'd be more a first crop soybean type argument as to where, are they going to be able to produce this massive crop? And so you're going to have to be pretty warm and pretty dry, I think, for an extended period before that happens.
How about in Argentina for their planting season for right now? Matt.
I mean, they're definitely they're a little farther behind, of course, because they're farther from the equator. As far as Argentina is concerned, I don't necessarily expect anything. I wouldn't get uh, too worried about the market reacting, until most likely they would see a reaction from Brazil. I mean, they're going to be behind a little bit of what we're talking with Brazil. Now, many times, if you get into a warmer, drier pattern, you'll see first a soybean meal type rally, which leads the whole soy complex higher. We do have to remember over the last couple 3 years, that Argentina's stakehold is the 50% or more type exporter of world soybean meal. Might not quite be what it once was. It's still going to make the market highly reactive to dryness in Argentina. But at the same time, I don't know it's going to have as big an impact as it had before, especially as Brazil continues to build some of their crush industry out. Clearly, the U.S. is continuing to grow their crush industry, mostly talking renewables. So there could be a fair amount of soybean meal moving forward that we would have on the world market. So I'm not as concerned about that just yet.
John, what is new with the dairy markets for right now?
Well, the milk market's obviously been heavily pressured since we put those highs in here just a couple months back, first part of September. We had a heck of a run up into that window as we saw production decline and milk to cow numbers decline. But one of the things that's very common in the dairy industry is high prices cure high prices very quickly as producers quickly start ramping up production. So we've seen that in the last couple of milk production reports. We've seen milk production kind of come into play. The other big factor, obviously, that was part of that rally was the strength in cheese prices. That has really kind of hit a tumble, bringing this milk market down. You look at blocks and barrels trading $1.84 area, $1.85 area today. Fairly difficult day, 5-6 cents lower there, but they're trading almost 50 cents off that recent high from back into September. So that's a big driver in milk prices. Now, chart wise, we're at a spot here. Maybe this milk market can find a little bit of footing. That December contract, the second month contract, now testing the 200-day moving average, got some, pretty potential point for a significant low here. We'll see if that can kind of hold in. The encouraging side is we're getting into the holiday season. That's typically a window we start seeing some more dairy product demand, cheese demand, butter demand. And if we can get some footing in that cheese market, maybe this milk market at least find some footing here in the shorter term. For some of my producers that have been hedged, we're going to start talking about some different strategies on that regard, possibly even, shifting our focus a little bit more that maybe this market can find a little bit of stability.
How is dairy export to China? We were talking about the trade for right now.
That's been one of the bright spots in terms of the milk market. Has been the pickup, not so much just China, but just Southeast Asia in general. In terms of products moving overseas, we've been seeing that demand pick up. But now that did kind of fall apart as prices got higher. So again, now with the milk market back where it is, where cheese prices back down in this $1.80 handle, makes us more competitive on the global scale. Hopefully, we still see some business stepping into the U.S. market in that regard. I think right now, though, maybe the biggest focus in that milk market is going to be what's happening on the domestic side here as we get closer to the holiday season and that typical strength that we see in the retail side here for the holiday window.
Do you have any final thoughts or recap of our conversation about updating on crop progress in Brazil, Donna?
Well, I think with what we've seen up until now and the forecast for rains through at least the middle of November, I think things should go along pretty well. And they're saying that we're supposed to look forward to getting substantial supplies out of South America. So as long as we continue to see good weather down there, good rainfall, things should go along pretty nicely.
Thanks to you guys.
Thank
you,
you,
Caesar.
Thank you, Caesar.
Thanks for John Heinberg from Total Farm Marketing and Donna Hughes from Stonex Financial, Matt Bennett from Ag Markets. Net. You can listen to our show wherever you get your podcast. This been the Markets Club podcast.